We're pushing boundaries, reaping benefits. What an amazing theme for this year's Hong Kong Fintech Week 2022. Welcome everyone here at the Convention Center in Hong Kong and everybody online, our attendees worldwide and from mainland China. Asia's leading finance and technology conference is back, and you saw it is bigger and better. We are all pushing the boundaries for the future of fintech. And as I said, we are connecting the online with the offline bigger. My name is Jamilet Cano, and I'm going to be your MC today. Remember that we have so much content, network opportunities, so you must download the event app. We want to thank, first of all, the event organizers, Financial Services, and the Treasury Bureau. Thank you very much. Invest Hong Kong, Hong Kong Monetary Authority, Securities and Futures Commission, and Insurance Authority. And the appointed event organizer, Finoverse, formerly Finovatia. Thank you for putting together such an amazing day, well, couple of days. And also, as I mentioned before, you have the event app. If you haven't downloaded, please make sure you do so. Hong Kong Fintech Week 22, because in the app and also for attendees online, you can have networking opportunities at the deal floor. Remember that you must wear your masks during the whole event. If you happen to take photos, share and hashtag HKFTW22. And we want to address your most burning questions. So we have Slido also at the event app for you to send your questions, and they will be voted by the attendees. And the top questions, they will have the chance to be asked here on the stage. You can also be part of the live poll. Make sure you connect, you go and check it out, the exhibition, and also the other stages that we have, Future Stage, the Web3 stage, and the Hong Kong stage. And if you need any simultaneous translation for the sessions, we have it at the back with SI channel number 1 for English and number 2 for Mandarin. Well, enough of me. Without further ado, we want to start this wonderful day of Hong Kong Fintech Week 2022 with our opening remarks by Mr. Paul Chan, Financial Secretary, Hong Kong SAR. Please welcome him.
Distinguished speakers and guests, ladies and gentlemen, good morning. First of all, allow me to apologize that I can attend this year's FinTech Week only through a video recording. I would really love to join you in person, but obviously the Arabian hospitality is keeping me away. The Hong Kong FinTech Week starts today. I promise you, a truly rewarding experience on any day during this week, whether you're attending the in-house sessions or tuning in to the ambitious online program. After all, more than 250 high-power speakers are taking part, presenting the latest intelligence, insights, and fintech opportunities in Hong Kong, the mainland, throughout Asia, and around the world. They are joined by more than 500 exhibitors and over 30 delegations. And with some 20,000 attendees and more than 3 million online views from 80 economies expected, Hong Kong FinTech Week is one of the world's largest fintech gatherings, an annual global village built on innovation, technology, and boundless business promise. Speaking of promise, 4 high-profile areas take center stage at this year's event: global governance, opportunities in Guangdong, Hong Kong, Macau Greater Bay Area, digital assets, from central bank digital currency to Web3, and emerging technology. For the next few minutes, allow me to put a digital spotlight on Hong Kong. Only 5 years ago, we count no more than 180 fintech companies. Today, we are home to more than 800 fintech enterprises, large, small, and startup. Many of them are founded by overseas talents from Israel, France, the UK, and many other places. And we ought to be proud that our fintech sector also gave birth to a number of unicorns. That impressive growth has been powered by Hong Kong's open market, a rigorous regulatory regime, the rule of law, sophisticated infrastructure, and the free flow of capital and information. No less important, we are boosting our financial infrastructure, and thanks to our one country, two system principle, strengthening the connectivity with our country and the world at large. The digital transformation of our financial services sector is a central priority. The Hong Kong Monetary Authority's FinTech 2025 strategy includes the building of a commercial data interchange. It was launched last week, I'm pleased to say. That landmark development allows enterprises to share their data with banks through a central platform, enabling more convenient services and facilitating small to medium enterprises to gain access to financial services. Our financial services sector embraces the open application programming interface. It boosts innovative financial services and customer experience. Service providers can access bank information on deposits, loans, insurance, investment, and other products and services. And we are offering subsidies to fintech companies and research bodies, allowing them to partner with financial institutions on the development of new fintech products. Working with mainland authorities, we are helping our fintech companies conduct pilot trials of cross-boundary initiatives and expand their business in the mainland. That includes building an online system to connect Hong Kong fintech companies to users, partners, and investors in markets in the mainland, Southeast Asia, and beyond. It is expected to be launched before year's end. Central bank digital currency, or CBDC, is fast emerging. The Hong Kong MA has begun preparatory work for issuing our very own CBDC. It is also working with the People's Bank of China, the Bank of Thailand, the Central Bank of United Arab Emirates, and the Bank for International Settlements Innovation Hub Center in Hong Kong on a multiple CBDC bridge project, enabling real-time cross-border foreign exchange, payment versus payment transactions. The cooperation with the PBOC also includes the testing of digital renminbi, or eCNY, for use in cross-boundary payments in Hong Kong. Earlier this morning, we issued a policy statement on the development of virtual assets in Hong Kong. It covers our vision, regulations, thought on investment protection, and pilot projects to capture the technological benefits and financial innovation made possible by virtual assets. We want to make our policy stance clear to global markets to demonstrate our determination to explore financial innovation together with global virtual assets community. Meanwhile, a bill to establish a statutory licensing regime for VA service providers is now going through our Legislative Council. The Hong Kong MA is also analyzing feedback received on the regulatory approach towards stablecoins, and we will ensure that it reflects international regulatory recommendations while responding to local circumstances. We are exploring a number of pilot projects to test the technological benefits brought by virtual assets and their further applications in the financial markets. These projects involve NFT issuance, green bond tokenization, and e-Hong Kong dollar. As an international financial center, Hong Kong is open and inclusive towards the global community of innovators engaging in virtual asset businesses. The government, in conjunction with the financial regulators, are working towards providing a facilitating environment for promoting sustainable and responsible development of the virtual asset sector in Hong Kong. Later today, our financial regulators will also offer you an update on our latest regulatory thinking. Talent is central to the development of fintech. This government attaches great importance to the development of fintech professionals. That includes developing dedicated fintech programs at numerous post-secondary institutions in Hong Kong, as well as establishing fintech qualifications for in-service financial practitioners. Fintech qualifications for the banking sector were launched earlier this year, and practitioners gaining qualifications will get their tuition fee reimbursed. We are also looking to extend these qualifications to other financial services areas. In his first policy address, the chief executive set in motion a variety of initiatives to attract companies and professionals in industries of strategic importance to Hong Kong. These high priority sectors include life and health technology, artificial intelligence and data science, advanced manufacturing, new energy technology, and of course, financial technology. I will chair the Office for Attracting Strategic Enterprises, looking at how we can best attract smart and ambitious companies from the mainland and from all over the world. And we are establishing a $4 billion US co-investment fund to invest in their businesses. The Chief Secretary for Administration will lead a talent service unit targeting a well of innovative professionals to look to Hong Kong for their future. Ladies and gentlemen, that means you. Indeed, the policy address this year have rolled out aggressive schemes with favorable terms for attracting talents. Among them, a top talent pass scheme for those with more than 2.5 million Hong Kong dollar in annual salary in the past year, or graduates with or without work experience from the top 100 universities in the world. In fact, around 160, because there are different lists. Maybe issue a pass for them to come to Hong Kong to explore the vast opportunities here, even if they haven't secured a job offer yet. What's more, to facilitate talents' long-term development in Hong Kong, we will refund to them certain stamp duties that they have paid for their purchase of their first residential property after they have become permanent residents of Hong Kong. A talent service unit, as well as dedicated teams in our economic and trade offices in the mainland and overseas, will be there to serve you as a one-stop shop. My thanks to the organizers of Fintech Week, Invest Hong Kong, and the Financial Services and Treasury Bureau, as well as the Hong Kong Monetary Authority, the Securities and Futures Commission, and the Insurance Authority. I'm grateful as well to all the sponsors involved in ensuring the certain success of this 7th edition of Hong Kong Fintech Week. Ladies and gentlemen, this is a memorable moment for Hong Kong. In a great many ways, we are telling the world that we are back in business, back in the business and pleasure of welcoming you to Hong Kong. And alongside Fintech Week, we are hosting a 3-day Global Financial Leaders Investment Summit this week. Then there is the 7th, beginning this Friday at the Hong Kong Stadium. Yes, after a 3-year absence, the Hong Kong 7th is back too. A long weekend of high-octane sport and flamboyant entertainment, and that is just in the stands. And hopefully I will soon be back to Hong Kong too. Ladies and gentlemen, I wish you a rewarding Fintech Week and the best of business and health in the coming year. Thank you very much.
Very interesting words by Mr. Chen. We thank him very much for sending his remarks. And coming up next, we have our opening keynote. And I'm very, very excited about this one because our next speaker, Eddie Yue, Chief Executive of Hong Kong Monetary Authority, has put together a very interesting surprise for you. So please welcome him now.
Hello, Eddie. Welcome back to the Metaverse. Before you head out to Hong Kong Fintech Week, would you like to warm up with a game of table tennis? Your challenge is to consecutively hit 6 floating targets. Nice shot, Eddie. Congrats on leveling up. It's time to get dressed. Shall we try out some outfits from the Avatar store? These wings will definitely make your entrance extravagant. This spacesuit is cool, but people won't see your face. You look best in your trusted suit. Hold on tight, Eddie. We're teleporting to the venue to meet everyone.
Good morning, everyone. Welcome to the Hong Kong Fintech Week. It's a very exciting and important week for Hong Kong. For the first time in 3 years, we're welcoming many of our overseas friends to come back to Hong Kong for the Fintech Week and also the Global Financial Leaders Investment Summit and then the Rugby Sevens after that. And that marks the beginning of our path to normality, and all visitors should see and feel the vibrancy and the dynamism of our city. And part of this dynamism comes from the fast-growing fintech ecosystem in Hong Kong. Innovative fintech firms are exploring ways to drive the momentum towards an even more tech-enabled financial industry. Many are looking at how to make use of the various blockchain protocols in order to create products or services through crypto, stablecoin, DeFi, NFT, or the metaverse. As you can see from the booths outside, some financial institutions are already using some elements of the metaverse for brand building and customer education. And it will be great to see whether in future and whether to what extent the metaverse can form a new landscape for real-world financial activities one day. And I hope that the opening that you just saw illustrates how the metaverse can mirror or even improve on reality. For example, what you see on screen just now, my avatar definitely looks younger and cooler than real me, and he definitely plays better ping pong than the real me. 3 years ago at the same event, I said that technology adoption will be a very bumpy road. And of course, no one could have guessed how bumpy that road will be. But for Hong Kong, the whole journey has been rewarding and fascinating. Our fintech journey started in 2016 with the Smart Banking Initiative launched in 2017, and then we rolled out our Fintech 2025 strategy just last year. But in between, we have introduced a faster payment system now with 11 million registrations and more than 1 million transactions every day. And we've also got 8 virtual banks now with 1.7 million accounts and also 25 billion Hong Kong dollars in deposits. And they're all delivering innovative and inclusive products entirely through digital channels. And last week, we launched the Commercial Data Interchange, or CDR as we call it. And that makes financial data sharing between banks and data providers a lot more efficient so that borrowers, especially the SMEs, they can make use of their own data, things like their payment data or the B2B e-commerce data, so that they can gain better access to bank loans. And we are also one of the few central banking institutions that are piloting and experimenting with both wholesale and retail central bank digital currencies, or CBDCs. So if you ask me whether I anticipated all these developments when we first organized the FinTech Week back 2016, the answer is definitely no. Technology has been developing incredibly fast in the past few years. And in fact, digitalization of financial services has been accelerated and not impeded by the pandemic. The momentum of our fintech journey is only getting stronger. And we will continue on this path of fintech innovation. And to help us to navigate this long, winding, maybe foggy road, we need to take a pause at this point and look back and ask ourselves what we did well, what we could have done better, and how we can do things better in the future. And today I would like to take this opportunity to share 3 reflections with you. And I won't pretend that these are in any way definitive, but these, I believe, are the takeaways of our journey so far. The first reflection is the need for radical open-mindedness, a term that I borrowed from Ray Dalio, who used that to describe the idea generation in investment. But I would argue that this is even more applicable for fintech innovation. We need to be radically open-minded to new ideas and try things that could make the financial system better. When we brainstorm ideas for new fintech projects, we usually won't know where that will lead us. The only sure thing that we know is that if you don't try, you're not going to get anywhere. And the key is to learn from failure and move on. This very open mindset, has gotten us a hugely popular faster payment system, 8 virtual banks, and a vastly more advanced data sharing infrastructure in our financial system. In the beginning, we were sometimes a bit hesitant or even resistant, wondering how new creatures like crypto, stablecoins, DeFi, or other blockchain-based innovations can fit into the mainstream finance. In fact, no one can say that they were sure how these innovations would shape the things to come. And some of us, understandably, were just hoping that, hey, just go away and let's get back to business as usual. And financial markets don't really like surprises. And the idea that disruption is a good thing is a bit unfamiliar to many. But over time, it has become very apparent that these innovations, in particular the technologies and the business innovations underpinning them, will be here to stay. And they will naturally develop very nicely in a healthy financial system like Hong Kong. They have the potential to improve efficiencies, reduce intermediary costs, and also promote innovation. Digital innovations encompass a wide spectrum of products and services well beyond the commonly known cryptocurrencies. DeFi, given the composability feature, can inspire a lot of innovation in finance. Take tokenized green bond as an example. We concept tested the idea with the BIS Innovation Hub last year, and we're actually adopting it for an actual issuance later this year. Think about it. When bond and cash are all tokenized and can be brought on-chain, all the bond life cycle events like asset servicing, trading, redemption, they can all happen more efficiently in a distributed and transparent manner. And that could even make possible real-time tracking of the green impact of the tokenized bond. But in addition to traditional financial assets, blockchain technology can also allow fractionalization of asset ownership, whether you're talking about art, real estate, or other assets. And that will create a new form of financial intermediation. And with radical open-mindedness, we can use technological innovation to make financial markets more complete and bring benefits for the real world. Now, wearing my hat as a regulator, a radically open mind does not mean that financial stability will fall by the wayside. The use of digital innovation needs to be complemented by a clear approach to money laundering, financial, and other risks. We continuously work with banks to achieve this. We also ensure that consumers and investors, they understand the risks associated with investment in these still largely unregulated products. To do this, we need to put in place the right guardrails. And the basic principle is very simple. Same activity, same risk, same regulation, so that digital assets performing similar functions to traditional products should be subject to similar regulations. And that is exactly what we and other regulators in Hong Kong are doing. The HKMA is putting in place a risk-based and proportionate regulatory regime for payment-related stablecoins. The SFC is introducing a framework to regulate digital asset trading platform. We have also issued guidance to banks on what they need to watch out for if they wish to offer crypto or DeFi-related services or products, whether it's account opening or custodial services. And these guardrails will, in fact, provide a solid foundation with a clear set of rules on which a vibrant crypto and DeFi ecosystem can be built and developed in Hong Kong. So whether I'm wearing my hat as market enabler or as a regulator, there is a need to be radically open-minded, basically to have a welcoming attitude to new ideas so that we can achieve public good through a fair balance between innovation and stability. My second reflection is more is more. We may be a lot more familiar with less is more, which is the mantra for designing good, friendly user interface or cool technology products. But new platforms in retail payments, data infrastructure, or cross-border payment platform, they tend to be more successful and more sustainable when they can achieve widespread adoption which will lead to strong network effects. Just think about the faster payment system that you use every day. Will you still use it every day if your friends and family were not also on the platform? No. So from the design stage, we aim to include more currencies and payment institutions so that we can attract a very rapid build-up of users. And the result is the world's first multi-currency instant payment system connecting not just banks, but also e-wallets with customers. And with that strong network effect, FPS adoption in Hong Kong is probably one of the fastest in the world. And we are strengthening this network effect further by introducing FPS payment for merchants and government bills. Or think about why we launched CDI, the commercial data interchange that I just mentioned. As you know, data is an essential nutrient to digital development. Currently, commercial data is scattered across different isolated data islands built bilaterally by banks and individual data providers. The idea of CDI is to provide a common data infrastructure that can replace these compartmentalized one-to-one spaghetti-like connections into an efficient many-to-many connection with an interface with a platform in between. Banks will have common access to a sea of data, which will allow them to compete on innovation in service delivery. And for this to happen, we need scale. We need to connect as many data providers, data consumers, and also data owners as possible in order to create this network effect. The same goes with mBridge, the cross-border payment project that recently completed a number of rounds of pilots. For the platform to be sustainable, it is important for as many banks and their clients as possible to use it. The more, the better. It is similarly important to include as many currencies and jurisdictions as possible. This is a virtuous cycle. The larger the network, the more the users, which in turn will further expand the network. So again, more is more. And my third reflection is that the key to success is beyond tech. It is not beyond tech, the vaccine that we're taking. Here I am referring to the need to go well beyond technology to create network effects. Projects that fill a glaring gap in available services, like in the case of FPS, it may achieve quick adoption more easily because you need the service. But for other projects that seek to replace current products or practices, adoption could be an issue even if the new product or experience is superior to what we have currently because of inertia. Let me illustrate this using our CDI initiative. The technology to construct the infrastructure and connect all parties is relatively simple. But creating a conducive environment to attract all stakeholders to join is a lot more challenging. The project team, in fact, spent most of their time not on the technology part, but in creating a commercially viable arrangement to ensure that there's something for everyone. The banks can use data to manage their credit risk, the data providers can earn fees, and data owners can borrow more easily and cheaply. So the key to success to CDI clearly lies beyond technology. We need to find the right commercial incentive for all to benefit so that we can create the network effect. And similarly, for the Enbridge project, technical interoperability is key, but it's relatively straightforward. The platform already has the flexibility to allow central banks to easily connect, whether it's through CBDC or even traditional payment system like RTGS or FPS. But in itself, that won't attract more jurisdictions to join. In order for them to join, the platform needs to account for policy and business challenges. Things like how to build in different regulatory requirements like anti-money laundering, how to ensure sufficient on-chain foreign exchange liquidity, or how to develop a shared legal framework. These are all challenging but necessary tasks. The project team will focus on these issues, which are well beyond technology, in order to take the project to the next stage. The HKMA began our fintech journey 6 years ago. By now, we have come a long way, reached some important milestones, kept pace with our peers, and are now pressing on to uncharted territory. But like everyone else, we are still exploring, experimenting, and learning. And as we continue our journey, we will stay radically open-minded, learn from our failures and keep trying, and go well beyond technology to create a network effect. And as I said at the beginning, Hong Kong will continue on the road of fintech adoption. Many exciting developments are taking place, and you're bound to see interesting sites and meet interesting people along the way. So I invite you all to come to Hong Kong, experience our vibrant ecosystem firsthand, put your most innovative ideas and best technology here, and take advantage of the many business opportunities. I promise that the journey will be above and beyond rewarding. Thank you very much.
Wow, such an amazing opening remarks keynote. Because that video, I'm sure none of you were expecting it. I really, really like the avatar. And especially when Eddie said, more is more. I'm sure you are all excited for our next session. It's our first fireside chat of the day, and we have two amazing global leaders. Christopher Hu, Secretary of Financial Services and the Treasury, together with Yat Siu, co-founder and executive chairman of Animoca Brands. Please welcome them.
Good morning, everyone. And I suppose I should use GM for those from the crypto community. A big welcome to all of you to this year's FinTech Week. And through the process of organizing this FinTech Week, I'm thinking, who should I invite for a fireside chat with our fireside? Immediately, the name Yat Siu comes to my mind, because to me, he's Hong Kong-based, and he has been incredibly successful from Hong Kong. But that said, he's international in nature. His portfolio companies are everywhere in the world. And most important of all, I would say he's a person of controversies in a positive manner. I read a lot and also heard a lot about what you said regarding digital ownership, egalitarianism, education, which is very liberal. But on the other hand, you also talk a lot about capitalism, incentives, which is highly capitalist. So to me, your vision about metaverse and 3.0 to me is really interesting. I know that you have been talking this a lot at different forums, but to this group, we really want something exclusive. Is there anything exclusive about your vision that you can share with us right now?
Well, thank you very much, and GM to everyone here as well. So very honored to be here. Thank you. Hong Kong is home. It's our headquarters. I'm very proud to call this basically place where we started our business. Animoca Brands is a company that today has over 380 portfolio companies in the space of Web3 and the open metaverse using blockchain. And as a business as well, we are almost 1,000 people worldwide, most of them, a large group of them being in Hong Kong. And in terms of the vision, one of the reasons that attracted us to Web3 is this ability to have shared value across the entire ecosystem. So in the classic form of capitalism that you mentioned, shareholder capitalism, value accrues typically only to the shareholders and perhaps the management, but a very small group of people. And this value of capitalism has existed not just in Hong Kong, but all over. And as a free market, obviously Hong Kong has flourished in this context, but on the other hand has also been difficult for some of the younger generation to participate in this. What Web3 does, when you think about, for instance, things like Sandbox or, for instance, owning non-fungible tokens as a form of digital property, it changes the relationship from being a customer-consumer to a customer-owner. That means we have a form of true stakeholder capitalism. It means for the first time, really, we have a digital relationship with one where your customers can also share in the potential of the business in and of itself, and is more inclusive. And so we're really hopeful around this as well. The other thing I think is that when you think about sort of digital property rights, I speak about this a lot, but it's really important. Digital property rights is the framework in which we can allow freedom, economic freedom, which is basically what Hong Kong has always been cherishing. Hong Kong's growth comes from this ability to have economic freedom. But when you think about the digital world today, actually, we're not free at all. We depend on Facebook. We depend on Instagram. We depend on TikTok. We depend on third-party platforms that decide our life as opposed to us deciding for ourselves. Any app developer will realize that if I want to launch an app, I can't do it without permission. I have to ask Apple for permission, right? And so Web3 in the metaverse changes that, where the relationship actually is yours, or you have digital sovereignty, and where the property rights attached means that I can now conduct business with you as the owner, as a true owner of your digital assets, as opposed to one where I have to seek permission, which is the world we generally live in today.
I read through the portfolio of your companies that you highlighted. Basically, it's one of the largest in the blockchain community. And I'm sure, like, for a big family, you have many children, but some of them could be your favorite, some of them may be less favorite. Among your different investments across, like, infrastructure, DeFi, crypto wallet, music, art, whatever, which are your favorites?
Well, I can't really talk about my favorites because, as you well know, we can't talk about our favorites because I all love them. Right? But I think the one thing I will want to add, whether this is like the Sandbox, for instance, or Dapper Labs, or OpenSea, or many of the companies that today you're using that are all part of the portfolio, what Web3 allows is the ability to have a shared network effect, meaning that they can very easily cooperate with each other. So, for instance, when we sort of started with Sandbox back in 2018, they could easily sell their assets on OpenSea. They don't need an API, they don't need a contract, they don't need special permission. In the classic world of business, it's all very permissioned. I need a contract to work with you. I need an API to do that together. So all these things combined actually make it difficult and create friction. But in Web3, you can work with each other without actually talking to each other. The permissionless nature allows it to scale, which is also the reason why a large portfolio strategy, as we have, works, because they create economic activity. And so the way to think of Web3 in the metaverse is it grows economic activity. It's not just the revenue and the P&L that we do as a business, but we also help stimulate the actual growth of an actual ecosystem in the form of GDP. But maybe if I'd like to ask you a question, because I saw the exciting policy announcement today, I think it'd be interesting not just for the audience, but also for the rest of the world to understand sort of, what is the sort of virtual asset policy that Hong Kong has just put forward literally like an hour ago.
In fact, we tried to time this announcement of crypto or virtual asset policy in this crypto winter, because a lot of you can see this is a time when there has been ups and downs in prices, and there is potential uncertainty in terms of where this market should go. But that said, I think our stance is very clear, as set out in the policy statement, that first of all, that we see this as a trend that's going to stay. You've talked about, like, for example, DLT, blockchain, like some of the investment portfolio companies that you have. That has been there for a while. But at the same time, these technological advancements basically yield positive changes in the way that trade works, the economy works and the financial systems work. So our role is basically to harness and to identify these elements and to make sure that these could be beneficial to our economy at large, similar to your vision you just highlighted. And that's why in the policy statement that you just made, there are a number of areas that we have highlighted. Number one is that in terms of our vision or our approach, definitely we need to coexist with them. At the same time, we have to ride on this trend to see what are the positive elements we can get out of it. That's number one. And number two, even though it's going to stay, and similar to many things in the world, there are two sides to it. There's a positive side to it, and potentially there's a sound side and also a risky side to it. Like, for example, due to the anomalous nature of virtual asset, it's potentially susceptible to AML risk or other types of fraud, etc. So we need to have the right legal and regulatory guardrails in place in the law in order to ensure that this market can grow in a sustainable manner. And that's how, against this backdrop, that we list out our key deliverables in this context. Number one, in terms of our deliverables, is a common legislation to regulate the virtual asset exchanges or the trading platforms. And the good point, or the key point of being a licensee in this area is that once you become a licensee of ours, you can get hooked up to the traditional financial market, in a sense that other licensees in our traditional financial sector, like banks or other organizations, can be your distributor in such a way that you can tap into the vast market of our asset wealth management, basically with a total AUM over 4.5 trillion US dollars. That's number one. And number two, I would say, which is also of interest to everybody here, is regarding how we see the retail participation. It has been a lot of discussion in terms of how we should allow that or how we should not allow that. And soon after the law is enacted, we will go about having a consultation to the market to see how we can facilitate retail access to this new licensing regime. So this is something also clearly set out in the policy statement. And the third bit, I think, is more imminent in terms of how we see the virtual assets, which are in the form of exchange-traded products. As you can see from the news globally, different institutions, financial institutions, they are doing a lot in terms of having exchange-traded products, ETP, so to speak, with virtual assets as underlying. So right after the announcement policy statement, our regulator, SFC, they will issue a circular, basically highlighting how we will accept ETFs, exchange-traded funds with virtual assets as underlying. I think all these are positive developments from the regulatory and policy angle. This is one perspective. Another perspective that we want to look into is in terms of how the government can identify and also provide more use cases to harness this ecosystem. Because after all, apart from regulation, apart from policies, we also have to identify what are the relevant use cases from the government perspective that we should push, like today's theme on pushing boundaries. And I'm sure all of you will know that we will dish out 2,000 NFTs this time for the participants. It's the first time that we have a proof of concept from a government angle, having NFT issued. And these NFT issued, first of all, will enable you practically to get discount next time when you join us next year. And at the same time, it becomes a community in such a way that the information or the various programs that we have for you to facilitate your access to China can be made available to you within this community in no time. And all these are supported by Invest Hong Kong, which is our investment promotion team of the government. And apart from this NFT as a start, another use case that we have identified is regarding the issuance of government green bonds. And so far, the government has issued a $10 billion US equivalent of green bonds, and of course, both for institutional and retail. And one thing that we are contemplating with the help of MA is to see how we can use blockchain to tokenize our green bonds to be issued to institutional investors. We are going to apply blockchain, or DLT in particular, throughout the whole life cycle of bond issuance, from issuance, from settlement, from asset servicing, to secondary trading and redemption. So all these will have the technology applied to test out the scenario. And the third bit, as highlighted by Eddie just now, will be about the e-Hong Kong dollar. So right now, we are contemplating a three-pronged approach. Firstly, to deal with the legal and regulatory angle. The second bit on the technical side. And finally, is the timeline. So all these together, with our policy and regulation, I'm sure that we are in a very solid footing to draw more talent, more corporations in this part of the space to Hong Kong.
Well, let's talk about the talent a bit here, right? Because one of the things that, as a global corporation based in Hong Kong, most of our portfolio companies around the world are overseas, and maybe somewhat controversially because of the fact that we have China as part of it, basically involved. People have previously been concerned around the policy, so I think it's really positive, because one of the things that I always have to deal with when I'm traveling overseas is the conversation of, oh, Hong Kong, isn't that China? You can't do this, you can't do that, and of course every time I have to defend Hong Kong every single time. Now I think with this policy, it sets a good foot forward, but I think maybe for the audience in the world, it'd be interesting to understand the perspectives as to what is the difference between basically Hong Kong policies versus China. And then in terms of basically the talent pool, I've read something about sort of bringing people in. Many of our portfolio companies around the world would love to have another base. Can Hong Kong be that place, for instance? Please share.
And first of all, definitely Hong Kong is part of China. But at the same time, we operate under one country, two systems. So we have our own financial system, we have our own currency, and that's why we have our own policies in terms of what I just described. That's number one. And number two, I think one of the key elements that international investors or people come to Hong Kong is because of our international connectivity and together with our access to China. The rule of law and the way that we operate, which are in line with international standards, and also our world-class regulatory regime, I think all these has and will continue to stay for Hong Kong to be relevant under one country, two systems. And in response to your third point about what we have planned or will do to draw more talent and companies to Hong Kong, this is in fact one of the key elements of the policy address just announced by Chief Executive in terms of our new strategy, try to draw more companies and talent here. And to say it broadly or generally, first of all, for companies, all of us know it is really a competition globally in terms of how we can draw more quality companies, tech companies across the whole spectrum to come to different jurisdictions to boost the economy. And with that in mind, we'll have an office, a dedicated office, basically try to draw strategic enterprises to Hong Kong. And industries that we've identified basically span a whole spectrum. AI, data science, Fintech, of course, today is the Fintech week, and also other types of technology or other types of industries. So first of all, the target is clear. There's a list that we will provide, and also we will target in order to draw those companies here. And the second bit is in terms of once this what is clear, it's about what we can offer. So we will have a host of measures about like land, tax, or financing, you name it, in order to provide incentives for these companies to land on Hong Kong. Because these companies land on Hong Kong will not just generate tax for us, but at the same time, they will bring about employment, technologies, and also other types of production lines or research capabilities, which will all be of long-term relevance to our competitiveness. And the third bit, I think it's more personal, it's not just about money, is when you have talents or companies which choose to come to land on Hong Kong, there are some practical issues you need to help them. Like, for example, the children's education, where they can get a visa, so on and so forth. So we will have a one-stop shop, basically try to facilitate these talents and also these companies to land on Hong Kong, operate here, and to be successful here. So it is actually a whole array of measures combined to make us competitive vis-a-vis other cities or jurisdictions. This is on the company side. And on the talent side, as you highlighted, I think these times nowadays is really a war for talent, and Hong Kong is no exception. So what we need to do is really identify what are the key people and also the key industries where we want to draw the talent here. And similarly, we are very targeted. In terms of the latest announcement, basically we will have a top-class pass scheme focusing on people with an annual salary about $320,000 US, around like 2.5 million Hong Kong dollars. At the same time, those people who are graduates from the top 100 universities in the world and with experience, in terms of working experience, 3 out of the previous 5 years. And with those people in mind, they can come to Hong Kong, explore opportunities, and they are most welcome to do so. And even for those who fail to meet those work experience requirements, we welcome them to come, so long as they are subject to an overall quota to be set. But that said, I think the environment here is welcoming in terms of being open to business and also being open to talent.
Wonderful. That's exciting. I mean, I think to share a little bit about the experience with Sandbox. Sandbox itself, to your point, when, actually 4 years ago, most people in Hong Kong didn't even know what NFTs were. Now here we have the Hong Kong government issuing NFTs, right? I think that's pretty exciting. But also the pace and speed. I think this is one of the sort of, I guess, special sauces of Hong Kong. Technology adoption is rapid over here. I think Hong Kong was also one of the first places in the world, if not the first place, that had mobile phone adoption that was more than sort of 2 phones to 1 person, for instance. And the same with NFTs, right? A few years ago, most people didn't know what it is, and now everyone's talking about NFTs. The government's issuing NFTs, people are building on Sandbox, and so on. So I think this just goes to show that there is a love for this new type of stuff here, and also can sort of potentially sort of drive leadership in the region.
I think that's important in terms of the government taking a leadership role in terms of identifying what are the key elements that we need to work on. Just back to your point about talent, apart from the top talent pass scheme I just mentioned, in fact, we already have a talent list. Basically identify what are the key industries, including fintech, ESG, asset management, so on and so forth, which are the areas that we want more talent. At the same time, we will streamline the process in a way that for those people who are falling into those categories, basically the employers who are offering salaries to these people with an annual amount of around 2 million Hong Kong dollars, which is around like 220 US dollars, 220,000 US dollars, they don't need to really to prove that they are difficult to get the local people. They can just import them. So I think these are the things that are important messages to the rest of the world, that we are open to business, we are open to talent. And at the same time, if you talk about like crypto or virtual assets, basically these are the new breed of people that we need. And in fact, I'm sure that apart from grooming new talent, a lot of people here are also interested in knowing how about the people already working in traditional financial service sector. While we talk about the new, we also shouldn't lose sight of the present and the existing ones. And for those like me, I must say, sometimes I'm still trying to take NFT lessons from my boys. Are there any advice that you can give to our audience here in terms of what they should do right now or in the future in terms of equipping themselves with this new age?
Well, I mean, I think one of the ways that we always get inspired about how we see the future is to look at our children, right? Our children are the lens to the future. If you have to ask them, what would they like for Christmas, for instance? What do they want for their birthday? Very likely they want something virtual anyway. But I think one of the disconnects, particularly when you think about technology in the past, has been this generational divide, because in the past, parents could interact with their children in a manner that they can relate to. Where it's like, if you play football or you play sports or something, as a parent you used to do that, so you can associate that with your children. But now our children play video games, for instance. They're online most of the time. Even though they do physical activity, their social circle is very much sort of digital. And yet, let's say the older generation is not. So then what happens is that you have a sort of lack of understanding between that. And so I think understanding that and entering that world is equally important. I think of it similarly to, for instance, sort of the parallel of China. When we were being based in Hong Kong, often we get the question, how do I do business in China? How do I do business in the region? What do I do? Well, the most common answer is you have to come here. You have to visit it. You can't just be a tourist. You have to invest in the region in order to participate. This is normal for business. The metaverse is the same. You can't just be externally sort of trying to do something in the metaverse. You have to enter it as well. You have to invest in it as well. Whether and this is what happened when sort of groups like HSBC or Standard Chartered or Gucci or Prada, all these major companies started to buying sort of real estate in the metaverse, in Sandbox, and building an experience there, for instance. It wasn't just because they thought it was exciting, yes, and it was interesting from a marketing standpoint. It was also the only way to learn. You're not going to learn about the metaverse if you're not in it, right? And the other thing is that I think looking towards the younger members of your staff, actually within your organization, is another way, right? Which is they understand this. This is their world. They're digitally native. they're metaverse ready, shall we say, right? And they can drive these decisions. And I actually think it's also the growth opportunity. One of the biggest things, commentaries we got back from, when HSBC, for instance, sort of started to invest and build out basically the metaverse and sandbox, it wasn't just the external PR that was, exciting. It was the internal PR. Young people started to get exciting. And so we see the potential of the metaverse as a bridge of generations, where you can give sort of growth opportunities that basically give them a, let's call it edge, shall we say, for the younger members in your corporation, right, as a way. So basically look to anyone under 30 perhaps as a way to sort of lens. That's not to say, I mean, I'm actually almost 50, so I'm not to say that you can't enter the space, but look to them for inspiration, for they are our future anyway.
Just now, you quoted a few examples in terms of how Sandbox, which is one of your portfolios, companies, to work with the financial institutions. But I'm sure that the working relationship doesn't really stop there. You also work with other types of companies like property developers or even our MTR in terms of co-create or co-curate this metaverse experience. What are the lessons that you have drawn from these exercises or these enterprises, and which can be shared with the wider audience here?
I mean, I've shared some of this already, but I think the marketing message really, from an external standpoint, is that because there's so much excitement around it, it brings essentially a new audience into it, or it excites an audience. Because especially when you, like, for instance, the MTR, you are a utility. It's hard to appreciate something you use every day. It's like electricity almost. It's supposed to work. But when it doesn't work, you don't like it. But if it does work, it's kind of an ungrateful job, shall we say, right? But the MTR, sort of when a public utility, for instance, enters a space like the metaverse, it's sending a signal. It's sending a signal that is looking towards the future. And it's also sending a signal that it wants to include an audience that might have been misunderstood in a way, or may have not been sort of part of it. Because especially now, also, when you think about the government announcing a policy around this, issuing NFTs, actually what you're also saying, you're not just saying we're trying to enter the next level of the financial world. You're also saying, I'm actually including young people in the space who understand, who get excited by this as well. So it's that inclusivity. So I think the biggest lesson really is that I think of this as the way in which we can include sort of not just financially, but within sort of our social fabric, the generations. Because when you think about how wealth is generated, globally, not just Hong Kong, it does sometimes tend to split generationally as well, from an opportunity metric, right? For instance, it's very hard for someone who's young to enter the real estate world in Hong Kong, or frankly for the world. And that's okay, because maybe that's not for them. But if the only sector in which you can see growth potentially in the past was something like real estate, then it becomes difficult. It also creates a scenario where people feel like, well, what is my hope? What is my opportunity as a younger generation? Where do I see that prospect? This is where technology comes in. But with Web 1 and Web 2, it's not just Hong Kong. Broadly, the region has lagged behind. We don't have Web 1 leadership here. We don't have Web 2 leadership here, because we've essentially let it, if you think about it, what are all the online services we use today? They're American, maybe from China too, but generally speaking, they're not from this region. With Web 3, that's that opportunity. When you just not build over here, you can actually also become that leader, because the space is young and early. So we have an opportunity to become a regional leader, but also to drive leadership for that entire region. And with that, the opportunity for all the young generation in Hong Kong.
I think your earlier point regarding that we should really not just seeing it, but also doing it and going into it is very important. And that's exactly what we try to facilitate, in the sense that, like, for example, through our Invest Hong Kong, we have various types of acceleration programs, helping our fintech companies, which are now more than 800, to get access to the GBA and also to China. Because the important point is really try to combine tech with the actual applications. And China is the huge market where they can find applications across various types of industries. And of course, just now you mentioned that you don't want to see or to share with us who are your favorite boys or girls among your family. But Hong Kong being a very practical place, people look for investment tips and ideas. So among those investments that you already made, what are the good investment stories that you can share, or the relatively less good or potentially failure stories that you can share?
Well, I mean, I think, one of the nice things about doing stuff on-chain with blockchain is that you can actually measure and see the results. So this is one area that maybe some people who are not in the world of Web3 don't fully understand. Meaning you can track, for instance, what is the transaction volume, who's the buyers, all that kind of stuff. And that sort of transparency creates essentially a market, right? And as we know in Hong Kong, the more transparency and the more fair the market is, the more efficient the market becomes. This is actually what's true for Web3 and blockchain as well. So for instance, a number of projects that we're involved in that we're very excited about that I think have market leadership. For instance, Sandbox, obviously, that's a subsidiary group basically with, Metaverse Land, probably, times 100 company is probably one of the most best examples in terms of what it means for virtual real estate and what the value is and what people are developing on it. But another one, for instance, would be things like Bored Apes, right? A number of people in Hong Kong, actually Hong Kong has a large number of Bored Ape collectors. And what it presents here, that opportunity, as well as with Cool Cats, both of them have communities, both are projects that we're deeply involved in, is a demonstration where IP rights, for instance, aren't centralized. In the ethos of decentralization, you have the ability to take, for instance, that ape that you own or that Cool Cat that you own, and you can have the freedom to commercialize it yourself, right? So, Hong Kong has been rated the freest economy, basically in the world yet again, right? And that's actually what Web3 and the metaverse represent. Freedom in all sorts of economic circumstances, right? The freedom to transact in the most liberal possible way. So by owning these NFTs, you don't have just the ability to sell it to someone else. You have the ability to give it to someone to conduct business or create network effects on top of that, right? Now, of course, there are businesses that haven't worked out as well. Fortunately, in the space of Web3, it's been a very, very small number for the time being. And again, it's because of the shared network effect, right? So it's a little bit like a rising tide lifts all boats. Because 4 years ago, if you remember, Ethereum was like $100, Bitcoin was like $3,000. That was a true ice age. That was a difficult time. Today, people might say, oh, it feels like a crypto winter. But it's compared to 4 years ago, it's actually chilly, but it is not very, very cold in comparison, right? So I think again, the parallel we'll look at is take a look at it from an economic development standpoint. Actually, Hong Kong is a little bit like a metaverse, right? Hong Kong doesn't have natural resources. We don't have oil. What do we have? We have people, right? We have talent that comes here. It's actually really, if you think about it, it's a rock with very little in terms of its natural resources. But over the span of the last 50 to 100 years, Hong Kong has developed into one of the most influential financial capitals in the world. In really, if you think about it, entirely creative capital. It's really just the people that has made it. So its development is somewhat metaversal as well. So I think the idea of the metaverse is actually very compatible to the idea of Hong Kong and its development. And I think that's one of the reasons why I think this place could lead in the area and why people are so excited about it.
I think the way that you try to summarize what you say as Hong Kong being a metaverse is very good in the sense that it encompasses very types of positive elements about Hong Kong. And I'm sure these are all of the messages that you have brought to the Middle East, where you just came from. While our financial secretary cannot be with us physically, you just came back there, okay. Any particular feedback or any sharings that you can do with us from your Middle East trip?
Well, I mean, I think the Middle East is a region that is very much pushing forward in this area, particularly the UAE, places like Dubai and Abu Dhabi are trying to have again, crypto leadership, virtual asset leadership in the space, which is great to see Hong Kong take that position as well. I also spent time basically at FOI, basically in Riyadh, in the kingdom, and it's very clear that while Web3 in the metaverse is early, there's a lot of excitement in that space. And just to put it in raw numbers, right? There's about 5+ billion people online today. The Middle East also has generally a younger population as a whole, very gaming savvy space. 3.4 billion people play games. Everyone who plays games has a relationship with their virtual goods as one of ownership. Ask our children, do you own your virtual skin or your sword or whatever? And they'll tell you, of course I do, but actually they don't. And that is the opportunity spectrum. There's still only tens of millions of people in the world who truly own their digital assets. There's billions of us online, and I know we all actually want to own our assets. I think that's the big opportunity for the world, not just the region.
Yep. Thank you so much for your time, and I'm sure that you'll continue to be a good ambassador for Hong Kong. And with the policy statement we just issued, hopefully it will give you more bullets in terms of showcasing what we have done and what we plan to do. And it's always good to talk to Yat Siu, who's impressed me always as a visionary and also a practitioner, given how much you invested in this universe, and at the same time, how many companies that you have led and all been successful. And look forward to more success to come, and also use Hong Kong more.
Thank you.
Thank you.
Thank you to Adrian Chang. Indeed, let's make it happen together. And talking about Web3, the Web3 stage together with the future stage are open. So please make sure that you go and check out the content. And we have our Hong Kong stage will be running the whole day. We also have Slido at our events platform where you can submit your questions. And the most voted questions would be having a chance to be asked here on stage. Well, for our next session, our speakers are going to be discussing all about central banks and innovation. Is this an evolution or a revolution? Heading the conversation, please welcome here on stage Howard Lee, Deputy Chief Executive of Hong Kong Monetary Authority, together with Cecilia Kingsley. She is the head of BIS Innovation Hub, BIS. Please welcome them.
Thank you very much. It's really my great pleasure to be here today to meet all of you. And I have the honor to have Cecilia with me. Cecilia is the new head of the Central Bank BIS Innovation Hub, overseeing all the different innovation hubs in different regions. When the MC introduced us, she talked about central bank and innovation. Many people don't find these two words that sit very well together. And I was actually closely involved, like Cecilia, in the setting up of the Central Bank or BIS Innovation Hub idea in 2019. That's probably one of the boldest initiatives by BIS for many years. And it has now sort of, Hong Kong was the first center, and now it's sprung up to many, many centers around the world. And then the hub has ventured into a lot of different areas, like green finance, CBDC, cybersecurities, and now we welcome Cecilia on board as the new head. Perhaps, Cecilia, you are no stranger to innovation because formerly you are deputy governor in the Riksbank, and e-krona has always been quoted as one of the pioneers of investigation or study in the central bank digital currency. And so you have been leading that project, and you also chair some work groups in CPMI, futures of payment. So you are no stranger to innovation. With you on board, perhaps you give us some views as to, after 2 months, whether you have formed your idea as to how you push this very old industry of central bank into the innovation path, and then what's the lessons that you would like to share with us?
Well, thank you very much, Howard, for the kind introduction. And I'd just like to say it's such a fantastic excitement to be here. Just take a few seconds and listen to the sounds from out there. That's the sound of the future, and the sound of optimism. And I just wanted to point that out because I think it's wonderful. So BIS is the Bank for International Settlements is an international organization. It was set up in 1930, and it works as a collaboration between central banks across the world. And you're absolutely right that putting central banks and innovation into the same sentence is a bit kind of odd, because we think about central banks as a bunch of kind of conservative, preferably male bankers, and not much is happening very rapidly in that sort of world. But the world is moving very rapidly. I think we're living in fantastic times in history where so much technological breakthroughs seems to be happening. And although we're not really sure what's going to fly or not in this, we do know already that these mobile phones and the smartphones that we've had the best part of sort of 10, 15 years, it has really already revolutionized our lives, and we see new things coming almost every week, and we think about, okay, how does that affect our societies, and especially how does that affect the central banks when we are pursuing our roles in society, which is about providing a good version of money to people that is sort of meeting monetary stability and also financial stability. And 2 months into the job as running the BIS Innovation Hub, I can say that I'm really glad it was created because it creates these opportunities to central banks from different parts of the world to collaborate on these various focus areas you mentioned. What sort of future financial market infrastructure should we provide? What can we do in the climate space? How can we make regulations and supervision work even better? And I think it has opened up a curiosity, many different work areas between central banks and within central banks. And I think we are on a good path to experiment and explore and learn from the new technologies and think about how do we fit that in to what central banks is really at the core is about, with providing good services for the private sector to innovate from and at the end of the day create good financial services for people and companies.
Now, one of the key objectives of the Innovation Hub in the very original sort of inception was to try to do some common good for the central banking community and the financial world. And different innovation hubs are experimenting and testing different products. And some of these products might eventually turn out to be less successful than others and might just fade into the background over time. So how do you think this journey, even without a product, would contribute to the work of the central bank and also for the technology sector to better go into the fintech field? What do we have to offer to the tech community on this?
Well, the short answer is that I don't know. We will see, but I think we can already see that the first generation of innovation centers, Hong Kong plays a really important role there. We also have Singapore and Switzerland that came online in 2019, early 2020. And we're seeing projects coming out of there. Hong Kong has recently produced a new paper regarding mBridge, making it possible to make cross-border payments much easier and the likes. We're also having interesting projects in the space of green finance. And many of these end up in the sort of proof of concept prototype space. And we're very kind of transparent about these things. So you can download our reports, you can have access to many of the coding that we have produced as part of these experiments. And we hope that others will bring this up and take them and learn them and perhaps run with them and make something further with them. Some might be less useful. We don't know that yet. Nobody knows what the future holds. But nevertheless, it's important for central banks to understand what the technology is and how it can be used, and also what they can't be used for. So I can't see. We have a saying that we fail forward, but learning new things can never be a failure. That is only positive. So I think about these projects as some will be potentially be turned into products useful for central banks only in some cases, and possibly creating completely new infrastructures in other cases. We will see. But the knowledge that comes out from this and the collaborative spirit and the way central banks are now kind of zooming out and are interested in what the tech space can learn is hugely important, because if we don't understand what's going on in the society, you face the risk of becoming irrelevant. And that is a situation that central banks cannot afford to put themselves in.
Now, I think that resonates with one point mentioned by Eddie earlier at his opening, is radical open-mindedness. Yes. In the sense that central bank has been considered to be a very conservative, like what you said, very slow-moving entities. But now that we all open up to the ideas of innovation and we actually try to innovate, the fact that we go through the learning process, we go through the conversation with the industry, hopefully would make it a lot easier and for the world, not just the central bank, to innovate and then to provide something that can further improve the financial system of the world. I think that's perhaps an even more important aspect, if not as important, to recreating certain products which might be used by the central banking community, right?
Yeah, and let me be clear about one thing. So the central banks across the world, they look a bit different. They're basically in the same industry in the sense that they provide fiat money in a ways and forms and through infrastructures that makes it possible then for the private sector to innovate from. But it looks a bit different in different countries. And I think one of the interesting exercises the central banks are into right now is to realize that the domestic systems looks very different. So, for example, you mentioned that I had run the something called the Future Payments Working Group, which is part of this G20 agenda for improving cross-border payments. We realized exactly that domestic systems looks very different, the legislations look very different, and start to think about, all right, so how do we build rails cross-border so it makes easier for companies and households to make cross-border payments? That's not trivial, because payments used to be very domestic and kind of a feature of each and every particular societies. So we still have a long journey to move on, but the important is to take those journeys. And I think the role of the hub is to provide different examples of solutions, showcasing different technologies, kind of illustrating what could be done. However, technology only takes us part of the way. In order for these things to really come to life and become something that societies can use, you also need governance, legislation, supervision, regulations, and the likes. And that is up to others than the Innovation Hub. That is up to the regulators of the world. And they are the ones, together with the executive powers, to decide what should be done. So we can take it as far as what could be done, but others are the ones who decide what should be done.
Mm-hmm. Now, you briefly mentioned payment and also CBDC. Perhaps we take another look at this, because CBDC is something that no other institution can do. Only central bank can do it. And of course, you can have stablecoin and all sort of different payment tokens, but CBDC carries a special meaning in the sense that this is central bank liability. This is kind of risk-free money of the world. Now, close to 90% of central banks around the world are in different stages of studying CBDC. So it's virtually everyone. But as I can see it, different central banks might be studying CBDC or trying to use CBDC for different purposes. Some might be because their vast geography, the distribution is expensive. Some might be the diminishing cash usage. Some might focus more on cross-border payments. So what's your take from your vantage point in looking at the CBDC projects in the different innovation hub, as well as kind of different other central banks? Do you think this is going to be a hype that will fall away, or you see this is going to go into the mainstream where cash and also a lot of commercial payment means would be replaced by CBDC? Do you have a crystal ball and tell me what's going to happen in a few years?
No, I don't have a crystal ball. That would be nice, wouldn't it? But I think about this as the concept of CBDC is really about thinking about what is possible versions of the next generation of money, central bank money. We already know that we have some present, we have cash, and we have the version of central bank money that commercial banks have access to through the traditional RTGS system, real-time gross settlement systems that most central banks provide for their domestic payment systems and the members of that ecosystem. So I think about CBDC as a next possible generation, and I think it makes a lot of sense that so many central banks are following and kind of reflecting over, okay, how can we use this to improve our services to society further? And I think the journeys in different countries will look quite differently. So if I had a crystal ball, I sort of sense a future where some countries, some central banks will actually issue retail CBDCs because they see it very clearly meet policy objectives such as financial inclusion, effectiveness, efficiency, safety, maintaining public trust in the digital society. But I also think that other countries might choose another path. And I think retail and wholesale, I can see a future where they interact with one another. Exactly how this path will look like and sort of the sequencing of this, that's hard to say. But given that there is already a live pilot in China, there are other countries experimenting with this. I think we will see more of this. I will see some that are very successful, some will perhaps be closing down, and we will see a pause for reflection in some jurisdictions. But I think it's the journey that is the important thing. And if you take a step back and think about history, money is a fantastic invention because it solves mankind's need to make economic values portable. But that's what it is. Money makes economic values portable. We started with kind of seashells and gold and the likes. And for the future, we need something else than that. And that is the journey we're on.
Yeah, and of course, Hong Kong is one of the first, actually the first innovation hub here. And so what's your expectation for Hong Kong's and what a particular area you want Hong Kong to really collaborate with you together going forward?
Well, you can't set up a global innovation hub without having Hong Kong there. That's pretty obvious, right? And I was very pleased back when this idea first came into fruition at the Bank for International Settlement, which is as a Swiss location, that HKMI and also your colleagues at the Singapore and the Swiss National Bank were happy to kind of spearhead this great initiative. And Benedict Nolens, the fantastic head we have at the Innovation Center here in Hong Kong, and her team very rapidly got things going. Very impressive given that we were all hit by the pandemic at the same time. And the Hong Kong Center worked very much as a role model for the younger siblings in the family of innovation centers, the European ones. So we opened up a center in London some time ago, also in Stockholm, my hometown. Eurosystem and Canada also getting online. So I think Hong Kong and what has been created here is a role model for sure. And I just have high expectations and just expect you to carry on the fantastic job you're doing at being creative, fearless, and not sentimental, but looking ahead and being optimistic about the future.
Yeah, yeah. Well, I hope Hong Kong would offer the hub with some kind of a unique experience.
Yeah, exactly. What is your expectations as an
I think when we started, I think Hong Kong, we came out with some unique value proposition in the sense that, fintech is a big space. In the mainland of China, there are leaps and bounds going forward. And most of them have a presence in Hong Kong, but we also have a lot of the Western institutions. I would say that when we talk about fintech solution introducing into society, you cannot really copy, like cookie cutter, take a solution and then go to other places and expect the local population to readily adopt your solution invented somewhere else. So localization and understanding the culture of different places, different regulatory system is extremely important. And I really see that Hong Kong would offer the kind of melting pot of culture of different places and also technology companies of different backgrounds, where we can, like what you said, the journey is also important. How do we fit into different culture? How do we adopt the solution? How do we co-create among people of different, very different background and also culture and then upbringing? I think this is a value that I hope we can offer to the Innovation Hub in your projects.
Yeah, sounds very good.
Okay, so today, once again, I thank Cecilia for joining us in this event. And she's one of the few visitors after we have reopened the border to without hotel quarantine. She just told me that the experience getting through the airport was great, and I hope she would also go home and tell everybody now, okay, you can now go to Hong Kong, it's fine. Okay, so let's make a big applause to Cecilia. Okay, thank you. Thank you very much.
Thank you.
Thank you, Howard and Cecilia, for such an interesting discussion. We'll hope to see you very soon. Remember, we have more content at the other stages, Future Web3 and the Hong Kong stage, and we're going to take a 10-minute break. So make sure to come back, grab your seats, download the app if you haven't done it, Hong Kong FinTech Week 22, get the networking going, and submit your questions through Slido. Hashtag HKFTW22. See you soon. Hong Kong Fintech's week amazing content is about to continue, so make sure to come back, get your seats, and get ready. Starting again after the break, I hope you had some chance to network and build those connections that are very, very important for us to keep pushing the boundaries and reaping the benefits. For our next keynote, we're going to be talking about embracing innovation, regulation, and the future of finance. And we have our next speaker, Julia Leung. She is the Deputy Chief Executive Officer and Executive Director, Intermediaries, Securities, and Futures Commission. Please welcome her on stage.
Good morning, everyone. It's my pleasure to be here again at the FinTech Week. Today, I want to give you an update on the SFC's views on the metaverse, NFTs, Web 3.0, and the future of finance. But let me start with a topical subject, Japan's Metabor Law. This law was introduced by the Japanese government in 2008 with the aim of reducing the waistlines of middle-aged population. Citizens aged between 40 to 74 are required to have their waistlines measured every year, and those whose waistline exceeds certain thresholds have to attend mandatory counseling sessions, and also their employers will be fined. The Metabor Law was not without a controversy when it was first introduced. Many in Japan and elsewhere saw this as a private matter and considered the law to be paternalistic, if not downright intrusive. But that misses a wider point. The law aimed to reduce the rates of diabetes and cardiovascular diseases, and in turn ease the burden on the country's public health care system. Today, Japan enjoys the lowest level of obesity and the highest life expectancy among developed countries. You may ask, what does it have to do with our theme today? The crypto community has long believed that regulation inhibits innovation, limiting fintech development and thus investor choices. But this belief was shaken by the collapse of Luna and Terra in May, followed by the bankruptcy of Three Arrows and suspended withdrawals by the crypto lending platforms. Just like obesity, the excesses of certain crypto firms threaten not just their own well-being, but that of the investors and the entire crypto ecosystem. The market capitalization of crypto assets has now shrunk to about $1 trillion from the peak of $3 trillion a year ago. Up to now, many jurisdictions have adopted a light touch approach to regulating crypto assets service providers. But the crypto winter has strengthened the resolve of global financial regulators to regulate crypto asset services providers. In a statement issued in July, the Financial Stability Board said that the recent turmoil in crypto asset markets highlights their intrinsic volatility, structural vulnerabilities, and increasing interconnectedness with traditional financial system. An effective regulatory framework must ensure that crypto asset activities posing risks similar to traditional financial activities are subject to the same regulatory outcomes, while taking account of the novel features of crypto assets and harnessing their benefits. The SFC was an early adopter of this approach of the that the FSB is now advocating. Compared to those jurisdictions that regulate crypto asset service providers from an AML perspective, our approach to virtual asset trading platforms since 2018 has been a comprehensive one, providing for investor protection and market integrity in addition to AML. It is based on the principle of same business, same risk, same rules. Centralized virtual asset exchange operates in ways similar to stock exchange and broker-dealer, and those we license under our securities regulatory regime are subject to similar standards which we have adapted to address the specific risks posed by virtual assets. We also regulate the provision of virtual asset-related services by intermediaries. Licensed fund managers which manage virtual assets funds are subject to detailed requirements comparable to the Fund Manager Code of Conduct. But again, we have incorporated additional measures to address virtual assets risks. Our January joint circular with the HKMA gave the green light to securities brokers and banks to offer their clients steering services in virtual assets, provided that they partner with an SFC licensed exchange and comply with other regulatory requirements. We also clarified the requirements that apply to the distribution of virtual assets products. At a time when global regulatory landscape is uncertain, our regulatory framework has provided clarity and consistency. It seeks to capture all the dimensions of the public's interface with virtual assets so that investors are protected, and also to address the prudential risks to financial institutions. To date, we've already granted approvals to 8 virtual assets fund managers and 1 virtual asset exchange with another one approved in principle, as well as to 2 brokers to trade for virtual assets for their clients under omnibus account arrangement. Let me be clear. By adopting this approach, we are supportive of the underlying innovative technology, DLT. We are also welcome the growth of fintech community in Hong Kong. NFTs, the metaverse, and Web 3.0 are beginning to reshape our lives. As we have heard from so many speakers this morning, in particular, NFTs are now accepted as a new way to authenticate ownership and facilitate the transfer of artwork, music, videos, and a lot of commodities. Meanwhile, GameFi, which typically refers to blockchain games that incentivize players with tokens, is another area that is growing exponentially. All this innovation has spawned new economic activities in art, culture, gaming, and more. This is clearly something Hong Kong should support. There are many useful applications of DLT in global finance, and many financial institutions are exploring how to tokenize, fractionalize financial assets, or develop their own tokens on private blockchains in order to drive efficiency, provide transparency, and resolve some decades-old friction in clearing and settlement and payments. In decentralized finance, or DeFi, we see traditional financial products being replicated, but many of these activities are largely outside of any regulatory system. IOSCO's recent report on DeFi puts the total value of related transactions at more than US $250 billion, up from 19 billion a year before. The crypto winter shows that tapping these opportunities is far from straightforward, and in fact, they are fraught with risks and with a lot of harm to investors. Investor confidence in this space is undermined by the spillover of excessive risk taken by a few firms. Bringing crypto asset service providers into the regulatory fold is the only pathway to embrace innovation, and I will say more about it later on. Let me address the elephant in the room, the professional-only requirement for crypto asset customers. These include clients of SFC licensed trading platforms, securities token offerings, and virtual assets funds. When the SFC first introduced its regulatory framework for virtual assets in 2019, the crypto market was still relatively new. Given the novelty of our framework and the high volatility of crypto assets, we believed it was prudent to impose an overarching professional investor-only restriction, at least at the initial stage, even though there are robust guardrails designed for investor protection. 4 years have now passed. While crypto assets remain volatile, their global market capitalization has increased exponentially. From our own product survey, we note that investors bought 10 billion Hong Kong dollar in virtual assets funds via overseas platform in 2021, up from 8 million a year earlier. Investors now have a better understanding of the risks of trading these assets. In these 4 years, the crypto asset ecosystem has also made substantial advancement. More global financial institutions and service providers, such as traditional custodians, are entering this space and building institutional-grade infrastructure. Their entry has driven the growth of digital ecosystem, making it more sophisticated in providing services that are comparable to mainstream finance. We have also gained experience in regulating virtual asset trading platforms and fund managers. Given these developments, it is now an opportune time to review the PI-only requirement. In fact, our joint circular issued earlier this year already allowed the retail distribution of a limited suite of virtual asset-related derivative products trading on conventional exchanges overseas. Today, I'm happy to give you some updates on this front. The SFC has been actively looking to set up a regime to authorize ETFs which provide exposure to mainstream virtual assets with appropriate investor guardrails. We have come to believe that some initial concerns about virtual assets futures ETFs have become manageable and can be addressed with proper safeguards. Apart from existing requirements for ETFs, virtual assets futures ETFs will also be subject to additional requirements related to its management company, investment strategy, disclosure, and investor education. At the initial stage, we expect the underlying assets to be confined to Bitcoin futures and Ether futures traded on the Chicago Mercantile Exchange. More information will be available later today when the SFC will issue a circular on the authorization of virtual assets futures ETFs for public offering in Hong Kong. Another update we have for you today is on STOs, the security token offerings. The SFC sees potential benefits in the use of DLT in the security issuance and trading, which may bring efficiency, transparency, and lower costs to traditional finance. In 2019, we issued a high-level statement to clarify how our regulatory requirements apply to parties engaging in STOs, including offerings only to professional investors. The landscape has evolved considerably, and since then, STOs are gaining traction among traditional financial institutions. And many of them are keen to tokenize traditional financial instruments, such as debt securities or investment fund units. We are prepared to adjust our regulatory response and allow retail access if proper safeguards are put in place. Our preliminary view is that tokenized securities, a digital representation of traditional securities on a blockchain, should be treated in a similar way as existing financial instruments. In substance, they have similar terms, features, and risks as traditional securities. So it does not seem appropriate to classify them as complex products merely because they are issued or traded on a blockchain. Under this approach, a tokenized plain vanilla bond will be classified as a non-complex product, and therefore the firms distributing it will be subject only to existing requirements for the distribution of conventional securities, consistent with our same business, same risks, and same rules approach. However, the position will be different when a token features are more novel and complicated and does not have the legal wrapper of a financial instrument. Examples are fractionalized asset-backed tokens or tokens representing an income stream from projects. Depending on their terms and features, they will probably be classified as a complex product, and the licensed firm distributing them will need to ensure suitability and provide minimum information and warning statements. They will also be subject to the overarching PI-only restriction. As an additional measure to all securities tokens, we expect licensed firms to perform reasonable due diligence and conduct smart contract audits before the tokens are distributed to clients. Consequently, we will also revisit the requirements for listing security tokens on licensed virtual assets exchanges and see if any modifications should be made. With these proposals in mind, we are working on a circular to set out the modified security token regime in detail, and we will publish it when ready. My last update relates to the public consultation on the new virtual asset service provider regime. Currently, under the legislative process, the AML Amendment Bill makes it mandatory for centralized virtual asset exchange offering services in Hong Kong to be licensed by the SFC. Upon the passage of the bill, the SFC will consult the public on the more detailed requirements. During the bill's come stage, a lot of feedback was received from the LegCo members and the public on whether access to the SFC licensed platforms should be restricted to professional investors only, even though this is not hardwired into the bill. Those arguing for PI requirements said that relaxation would legitimize crypto assets. Those in favor of retail access to SFC licensed platforms claim that denying access would push retail investors to trade on online virtual asset trading platforms located overseas and are subject to little or no regulation. In fact, some are downright fraud. In light of the feedback, the SFC is minded to consult the public on whether the PI-only requirement could be relaxed, and if so, what should the governance procedures and the listing criteria for the platforms to emit tokens for secondary market trading by retail investors. The SFC's Fintech team is now intensively self-consulting the industry and stakeholders on this and other issues before finalizing the proposals. Ladies and gentlemen, in closing, I'd like to say we could be on the cusp of the future of finance if we get it right. But that's a big if. In this future vision, the underlying technology is so potent that traditional finance as we know today could be reshaped. More efficient clearing and settlement of transactions could be enabled by DLT. Investors will be offered a whole suite of financial products leveraging DLT and smart contracts. But whether that vision could be realized depends on a lot of things. First and foremost is trust. As we all know, traditional finance is built on trust. It is founded on a well-balanced regulatory system that revolves around intermediaries, brokers, fund managers, and the like, and is also focused on investor protection, orderly, fair, and transparent markets. But the selling point of DeFi ecosystem is its peer-to-peer nature, which aim at disintermediating TradFi institutions by a series of smart contracts and digital protocols. Some DeFi operators are intentionally elusive to minimize liability, regulatory scrutiny, or both. Following the lead of the Financial Stability Board, regulators around the world will be relentless in pursuing a regulatory solution to DeFi and other parts of the crypto ecosystem to protect investors and market integrity. Just like the Metaboard law, robust regulation is good for your health, it is good for the sustainable development of the crypto ecosystem, and it helps build trust among the public and with the counterparties in TradFi. So my final message to you today is to embrace innovation and regulation as the pathway to the future of finance. Thank you.
here at Hong Kong Fintech Week 2022. And also remember, we have our attendees online worldwide and also directly from mainland China. Thank you very much for connecting. You have the opportunity to network at the deal floor in the events app. Hong Kong Fintech Week 22. Keep sending your questions through Slido so they can maybe be asked here on the stage. You must remain with your masks all the time through the duration of the conference. And don't forget that we have the simultaneous translation headsets at the back because a few of the sessions coming up next would be in Mandarin. So you might need those simultaneous translation headsets. We also have for our online attendees all the content. You can see them on demand later on through the events app. Make sure that you don't miss out on any of the content. Well, coming up next, virtually with us, I would like to introduce here on the big screens, Yi Gang, Governor of People's Bank of China, giving us her keynote presentation. Please welcome.
Thank you, Eddie, for your kind invitation. Distinguished guests, ladies and gentlemen, I'm very happy to join you online at Hong Kong Fintech Week 2022. Today, I would like to share with you some of my thoughts on the central bank digital currency, or CBDC. CBDC has attracted growing attention in recent years. According to a BIS survey in May, 90% out of the 81 respondent central banks have started work on CBDC. The research on CBDC can help efficiently satisfy the public's demand for fiat money in the context of a digital economy. In July, together with the IMF and the World Bank, the BIS released a joint report entitled CBDC for Cross-Border Payments, shedding light on the role of CBDC in promoting faster, cheaper, and more transparent cross-border payments. However, many issues will remain when it comes to CBDC in application. In my view, privacy protection is one of the issues top on our agenda. eCNY is China's version of CBDC. It is mainly positioned as cash. For China, eCNY is mainly to meet the needs of domestic retail payment, enhancing the development level of inclusive finance, and improve the efficiency of currency and payment system. In designing eCNY, we try to ensure privacy protection and financial security through, by and large, anonymity and managed anonymity. To this end, eCNY adopts a two-tiers system. At Tier 1, the People's Bank of China supplies eCNY to the authorized operators and process inter-institutional transactions information only. At Tier 2, the authorized operators only collect personal information necessary for their exchange and circulation services to the public. Meanwhile, the People's Bank of China ensures personal information security through advanced technology and strict management with full adherence to consumer privacy protection laws and regulations. Transactions related to data is encrypted for storage. Sensitive consumer information is de-identified to non-transacting parties. Entities and individuals are prohibited from arbitrary inquiry or information usage without rigorous legal authorization. What is more, there are small amount soft wallets and hard wallets to meet the need for small value anonymous transactions both online and offline. That said, however, the legitimate demand for paper cash as a means of fully anonymous payments will be met at all times. It is also important to keep in mind that anonymity and full disclosure are not as simple as black and white. There are many subtleties in between. Therefore, we must strike a delicate balance between protecting privacy and combating illicit activities. Right now, we are working together with the Hong Kong Monetary Authority and some other monetary authorities on CBDC. We hope such cooperation will better serve both global and domestic investors and help to enhance Hong Kong's role as an international financial center. Looking ahead, we stand ready to deepen cooperation on CBDC with other monetary authorities as well as international institutions. Thank you.
We have our next video also virtually, but this will be in Mandarin. So if you need any translations, remember, you can have the headsets here at the back with SI channel number 2 for Mandarin, number 1 for English. Our next speaker here on the stage and online, Xiao Yunqi, Vice Chairman of China Banking and Insurance Regulatory Commissions, will give us his remarks.
Dear Chief Executive Yue, ladies and gentlemen, it's my pleasure to attend the 2022 Hong Kong Fintech Week. I would like to share with you some of my thoughts on Fintech. We know finance and technology have always been interactive and mutually reinforcing in the whole history. In China, each landmark financial innovation has always been attributed to technology advances. For example, 2,000 years ago, the development of metal smelting techniques laid the foundation for massive coin minting and propelled the transition from physical currencies to standardized coins. The maturity of papermaking and printing technologies in the Sung Dynasty made it possible to create paper money. Another example is the introduction of abacus, which greatly improved the computing power and promoted the prosperity of money and exchange shops. In modern history, telecommunication techniques made banking transactions available at any time in any region. In the 1950s, the birth and the growth of computers further enhanced computing power and the data storage capacity. From bank cards, ATMs, and online banking to mobile payment, virtual banking, the scope of financial services has been enlarged. The cost has been reduced, and the access to financial services has become much easier. even in China's remote regions. Now, local farmers can open bank accounts and make their banking transactions very easily. Nowadays, mobile internet, big data, and the blockchain have been introduced into the financial system. And this has been changing the way of business delivery and the business model, and even the industry landscape. In the meantime, new technologies and the models have also changed the way how financial risks are generated, shaped, and transmitted, laying out new requirements and challenges. From the macro level, some studies believe that digital technology and interconnectedness are destabilizing the financial system and they may even endanger financial stability. It increases the interconnectedness and the risk contagion and blurs the boundary of banking and the non-banking activities. It intensifies the procyclicality of the financial system, prompting institutions to expand in a boom and contract in a downturn. It makes the market behavior more homogeneous and volatile. It gives rise to another type of so-called too big to fail. From the macro level, individual financial institutions may face such risks as strategic mistakes, poor governance, cybersecurity threats, and over-reliance on third parties. All those risks could damage the safe and sound operation. We need to strike a sound balance between innovation and risk control. On one hand, we encourage the introduction of new technologies into the financial service industry. On the other hand, we also need to make sure that innovation is carried out in a safe and prudent manner. In China, the Fintech has gained fast development over recent years. The e-payment has been very popular now. In 2021, the number of personal bank accounts reached 13.6 billion, with nearly 10 accounts per person. The amount of online payment transactions totaled around 3,500 trillion yuan. This makes transactions more convenient and efficient, with cost greatly reduced. Inclusive finance has been actively promoted. Financial institutions actively use Fintech to enhance the accessibility and affordability of financial services, especially to unbanked and underbanked populations. Financial services have also reached more customers beyond the physical outlets and the regional borders. In 2021, the balance of internet loans for micro and small businesses increased by 47%, much higher than the average growth rate of total loans. The internet insurance premiums increased by 8%, 7 percentage points higher than the overall premium growth. Now, over 90% of bank businesses are conducted through online channels. We also encourage institutions to use technology to promote ESG. They are more proactive to climate change, more supportive to green finance and sustainable development. And they should show their social responsibilities. In this process, we also constantly change our supervisory philosophy and the methodology towards the new technology, and enrich our rules and the techniques to ensure Fintech operates safely. We improved rule-based regulations. all financial institutions should be under supervision. All financial businesses should be licensed. We have also reviewed all existing rules and regulations and introduced dozens of new rules exclusively for fintech activities. We enriched supertech techniques and skills. We set up the digital systems for on-site examination and off-site surveillance. During this process, we invited experts from Hong Kong and other jurisdictions that have been actively involved in. We also set up the intelligent inspection labs, focusing on risk identification for large exposures and providing early warnings. The big data platforms can automatically integrate data from the market and do cross-check and verification, and can have the so-called look-through of risk monitoring and analysis. As for the RegTech, we encourage institutions to improve digital platforms for compliance to ensure compliance risks could be controlled. Now the big banks have all established their RegTech systems, and as I know, the small ones are catching up. Another focus is to enhance public awareness. We all know technology is neutral, but in practice, it could be easily intertwined with financial misconducts and become the tool for fraud, money laundering, and even crimes. Therefore, we keep a close eye on its impact on public interest. Actually, for the past years, there were a number of such misconducts and illegal activities in China. They have aroused some public concerns, but thanks to our early intervention, they did not lead to big risks. In developing fintech, it's equally important to strengthen consumer protection, to protect personal privacy, to enhance information disclosure. Ladies and gentlemen, fintech is a big topic. It's developing, it's changing, and it's evolving. We are happy to share our experiences, and we are ready to cooperate with you all. Now, let me stop here and wish this FinTech Week a great success. Thank you very much.
And it is my honor once again this year to introduce my fellow Mexican, Agustin Carstens. He is the General Manager for the Bank of International Settlements. Please welcome his video on stage.
I am very pleased to participate in this year's Hong Kong FinTech Week, albeit virtually. I hope to be able to join you in person next year in Hong Kong, which hosts the BIS office for the Asia Pacific and one of our first innovation hub centers. I would like to thank the Hong Kong Monetary Authority and other organizers for the invitation to speak at the conference. The theme of this year's FinTech Week, Pushing Boundaries, Reaping Benefits, is a fitting one in the current environment. Central banks around the world are tackling decades-high inflation, seeking to bring it down to target without inflicting too much cost on the economy, including on financial stability. At the same time, central banks are looking ahead to longer-term challenges. Few are more important than how new technologies will shape the future of the monetary system. At the BIS, we have been working closely with central banks, academics, and the private sector to push the boundaries of our knowledge by analyzing the macroeconomic implications of digital innovation, including central bank digital currencies, or CBDCs, on the monetary system. In this respect, let me share with you our vision for the future monetary system and some concrete examples of how we are pursuing it. Our vision for the future monetary system is a fusion that combines enhanced technological capabilities such as programmability, composability, and tokenization with the safety, stability, accountability, and openness of central bank money. Central banks remain at the core of the system. They provide the foundation of trust for services provided by the private sector, built around central bank money. The blend of new technologies and central bank money takes the form of CBDCs. The metaphor for the future monetary system is that of a tree. Its solid trunk is the central bank, but it boasts a rich and vibrant ecosystem of private sector providers serving users to fulfill the economic needs of firms and households. In this tree, the ecosystem is rooted, figuratively speaking, in the settlement on the central bank's balance sheet. The future monetary system would have three components. The first is wholesale CBDCs for transactions between central banks and financial institutions. The second is retail CBDCs and fast payment systems for the public. The third is multi-CBDC arrangements to facilitate cross-border payments. Some elements of this picture of the future monetary system entail a leap in terms of the institutions and arrangements that govern today's monetary system. Their use cases would need to be tested against the current system. The path to the future monetary system is likely to be a long and bumpy one. We have taken the first steps on that journey in partnership with central banks and the private sector through the BIS Innovation Hub, including at our center here in Hong Kong. Let me give you a few examples. On wholesale CBDCs, the BIS Innovation Hub Swiss Center explored how central banks could offer settlement in central bank money in a future with more tokenized financial assets. We learned that it is possible to integrate CBDCs into existing core banking systems, and that central banks can play a key role in systems based on distributed ledger technology, or DLT. In our Hong Kong, London, and Stockholm centers, we are developing retail CBDCs. Our Hong Kong center has recently completed its first retail CBDC system, comprising a wholesale CBDC system and a retail e-wallet system called Project Aurum, in partnership with the Hong Kong Monetary Authority. This project will be featured in one of the panel discussions today. On multiple CBDCs arrangements, the BIS Innovation Hub has been working in Switzerland, Hong Kong, and Singapore with central banks on several concrete prototypes of using CBDCs across borders. So some of you may have heard about the mBridge project in our Hong Kong center. We're conducting this in partnership with the Hong Kong Monetary Authority, the Bank of Thailand, the Digital Currency Institute of the PBOC, and the Central Bank of the United Arab Emirates. I'm pleased to share with you that significant progress has been made on this front. In August and September this year, the pilot completed real-value cross-border CBDC transactions, the first of its kind. 20 commercial banks from these 4 jurisdictions made over 160 payments over the course of 6 weeks, involving more than 22 million in value. You will hear more about this in the next few days. Many of these projects are built around public-private partnership. The public sector provides the infrastructure, regulation, and supervision to ensure the efficiency and stability of the system. Private players provide the new ideas and competition to benefit end users. So let me conclude. Central banks are uniquely positioned to help forge a future monetary system as they serve as the guardian of the most fundamental function of such a system, which is trust. It is up to the central banks to shape and forge the future monetary system by reaping the benefits of digital innovation to serve the people and society at large. The BIS is a willing and ready partner for them on this journey. Thank you very much for your attention.